Hey folks, how's it going out there? So, pretty interesting day. A little bit of a continuation of yesterday's gains, building here. Getting news the U.S. Attacked a spy ship. That's interesting. A cyber attack on an Iranian spy ship. That's something you hear about every day, right? All right. Take a look around some in different areas of the markets here. Just getting everything all set up on my end. All righty then. So, yeah, a little bit of upward pressure today. We're just getting up to the most active call strike. We're seeing that as a bit of a theme. Zero DTE is really in the driver's seat here. I think we can safely say that's been a theme for a little while now. And lots of volume transacting at this 50-30 strike on SPX, which is about 50.4750 on the front month S&P futures contract. And that's the most active call, but also the put call ratio is favoring calls today. So there's a lot of bullishness under the surface. You can see it in some of the unusual options activity as well. So if you look at single stocks and ETFs, you can see there's been some pretty bullish call flows there as well. And I would say a pretty reasonable chance we kind of get up to that most active call strike, and wouldn't be too surprised if we close out the day there, given the kind of flows we have. Just gives us a little bit of upside here as we're closing the day here. Obviously, last 30, last 20 tends to be more volatile. We do have a large amount of resting liquidity below us. If I zoom out, you can see the distribution of options participation here. The flows are shown in the hot call, warm put, hot put, and then some of the areas of key options positioning are shown with this call wall and these gamma levels, and of course the gamma flip level that we've calculated. Let's look at the NASDAQ here. Pretty choppy trading in the NASDAQ, actually. You can see that volatility here intensifying as we get closer to the close here. It doesn't look as much like the S&P. We're zooming into the microstructure. The NASDAQ looks just a little bit comparatively weaker, and that's been a bit of a theme today, hasn't it? NASDAQ cash up about less than 0.2%, but S&P up over 0.5%. So definitely a bit of a theme underneath the surface. You do have a lot of these NASDAQ heavyweights with larger amounts of call premium. So that call skew is pretty heavy. And that does lead to a little more pressure as we close in on OPEX. You get more of the distributed flows from those stocks being call heavy. So you got to see a sort of continuation of those flows to keep it going. This is kind of cool, doing a little simulcasting here, having a little fun. Getting some news from LSEG Lipper that high yield funds saw about an 88.8 million outflow in the week. And investment grade funds saw 2.28 billion inflow. So a little bit more fixed income looking for quality here, which makes sense. You could look at the spreads in credit markets, and high yield spreads are so low right now. No real reason to take that risk at this point. You're not really being paid for it. Let's take a look at some of the unusual options activity we've seen around today. We got Broadcom, KWeb, Dow Jones, SMCI, of course, which is approaching 5,000, TSM, which hit all-time highs, Mara, Nvidia, Netflix, all a lot of unusual call flows, bullish flows in these. Some of these are standout flows. Let's see what this one's from. Someone put, wow, that's aggressive. 1.14 million in MicroStrategy 900 strikes. Someone's really looking to squeeze that one. If you follow those stocks, some degree of what's been happening to the upside there has been driven by short squeezes. We were able to take advantage of some of those on our Discord because we had seen there were some that were disproportionately shorted, and there were catalysts, including Mara. And I think that's something to kind of pay attention to. Hedge funds are so short certain pockets of the market, certain crowded single stocks that have low floats that are optionable. That when you have this rush into calls that's driven by a catalyst, it can blow those shorts up, and it can lead to some pretty explosive upside. And we've certainly seen that as a recurrent theme. So S&P just sort of pinging around between the most active call strikes, the two most active strikes as we approach the close here, just about 40 minutes away from the close. And tonight we got earnings from DraftKings, Coinbase, Roku, The Trade Desk, Applied Materials, DoorDash, Agnico Eagle, Toast, Open Door, and Hannon Armstrong after the close. Should be interesting. The Trade Desk is one I like to follow. They're a pretty good company overall. They've had some ups and downs with the ad business, but overall, they're probably one of the best of breed companies in that space. Now we are getting into that second half of Feb that tends to be a little bit more difficult. So it is something to take into consideration, the seasonality of both volatility and the S&P and NASDAQ stocks, quite frankly. That back half of February tends to be a little bit more topsy-turvy post-OPEX. So that is something to take into consideration if you're sitting on lots of gains, doing really well, if one wants to consider hedges or taking profits when that type of environment's been a repeating theme, quite frankly, for years. I mean, I'm sure we all remember if we were trading in 2021. Seeing just a little bit of a pull here as we get closer to the close. We do have a lot of resting liquidity below us. You can see it on the heat map here. This COB column is the current order book. So this shows this large bid. It's stacked on a couple of different price levels right below us. That could end up pulling us down into it. We'll have to see how price reacts as we get closer. If we get a bounce from there, probably get right back to those more active call strikes above us. Otherwise, we get kind of pulled into that area. We'll zoom out a little bit here too. We can see that second most active put strike just below the VWAP level as well. So thanks for tuning in, folks. If you have questions, let me know. You can let me know in whatever chat you're in. If you have any questions about what you're seeing on screen, what I'm talking about, or otherwise. We did get some pretty disappointing retail sales today, led lower by really slowing auto sales. That was the primary contributor there. And that was a pretty big drop in auto sales. So we'll see how that may impact some of the companies involved. That's going to be part of their, first quarter. Those are January's auto sales dropping off. We do see that resting bid below us actually growing here. You can see it becoming a stack of over 1,000 on the bid. That does become a little bit more magnetic. Tends to have a little gravity pulling price towards that level. So it is something we'll keep an eye on here. Buyers are still on the right side of the tape here. Really, it's going to be 50-25 on ES that would take them to being a little bit less on the right side of the tape, and particularly below 50-20. We can see those were large areas of the session volume profile where there's a lot of buying interest. So far, still, even though there is a little slide into the close, intraday buyers are still kind of on the right side of the tape overall. And the Nasdaq's lagging mostly because the Mag 5 are just sort of rolling over here. Google down 2.5%. Certainly not helping the mood. Apple down almost 1%. It's just continuing to have a bit of a choppy trade in Apple. Nvidia down 1.43%. Earnings next week for Nvidia, probably the most important seminal event of our entire human existence. Half kidding. Let's look around other markets here as we have Bookmap on screen. NASDAQ weaker than the S&P here overall. Like we can zoom in on the same scale. That NASDAQ pull's got a little bit more teeth behind it. That's looking a little bit more ugly than what we see from the S&P 500. The Russell is relatively more resilient, kind of a similar look as to what we saw yesterday from the small caps. Now, some of this is probably short covering in the Russell because if you contextualize the positioning, funds love to short the Russell. That's the hedge funds' other side of their barbell when they're doing long short is Russell and a lot of these single stocks that are quite crowded. And they're very, very long Mag 7 or Mag 5 or whatever number it is at this point. And as a result, when you see pressure in those areas, they're concentrated on the long side with leverage. They tend to reduce their exposure both there, but also on the short side of their book. It's deleveraging in essence, taking down that really high level of gross leverage, which is like 260, 270%. So when they're doing that, you do see some bidding in the Russell, right? So you have a day like this where you're like, why are small caps bid? Is this a rotation? Maybe that's part of it. It's not like that's an impossibility, but the bigger part of it is going to be that short covering, that flattening of the books, because hedge funds are so darn leveraged right now. And I think that's something that on a day like today, it explains some of the relative resilience you're seeing in the Russell versus the other indices. We'll take a look at crude here. Crude trading at about 78.2250, right? It's had a decent day. A little blackout here when I was doing some software updates, but it's had a decent day overall. Rates not really doing too much today. Just looking at the bond market, rates are pretty much just mildly lower, as is the dollar. You can see that's usually a little bit beneficial for gold. It has risen a bit today overall. But most of the market is kind of tame compared to what we're seeing in equities. Equities are a little bit more exciting. So S&P trading back up to this Gamma 1 level, the most active call strike, now moving lower. And NASDAQ continuing to roll over. We'll have to keep an eye on that relative weakness in the NASDAQ. This week, it doesn't mean as much because it's OPEX. You've got a lot of price agnostic players moving large positions around, not necessarily because they want to, but because they have to. It's that time of the month. But as we get into next week, we have more real price discovery. And so if some of that distribution of the most heavyweights in the indices continues, I think it could matter more, particularly if it's in the backdrop of rising rates. So we'll be paying close attention. I'll be continuing to follow this and looking for signs as to where things are going. I feel like we are a bit stretched here to the long side in the near term. It wouldn't be too surprising to see a correction in time, in price, or both. But we got to take what the market gives us. And today we're still seeing some more upside building here above 5,000, which is that most active, most highly positioned area on the entire S&P options chain by a lot. You've probably seen me put out charts about it. And Gamma 1 is going to be the second largest level of gross gamma exposure based on the SPX options visualizer that I've built for Bookmap. So this can be an area that provides some support and resistance, and it tends to be a little bit magnetic. Hence, we see price getting kind of pulled back there, and we've explored that area before as well. And NASDAQ still showing more distribution here. The CVD being negative 5,700 is kind of meaningful given the order book depth here is about 8.3 thousand contracts in the entire NASDAQ order book for the front month contract. So what that tells you is that there's been a decent amount of selling here, right? You've got almost the entire order book depth in distribution over the last 30 minutes. Not the same look in ES, by the way. Pretty balanced in comparison. And I will be adding single stocks to not only Bookmap to watch soon for these streams, but also to my options visualizer tool. So that's one of the things I'll be rolling out for the really popular optionable stocks is being able to track them the same way we are the S&P right now. In fact, it'll be a little easier because I won't have to do price translation between SPX and ES. You know, options for stocks are trading at the same strikes as the stocks in terms of there's no real translation to do like there is in futures. So that'll be kind of cool. Looking forward to that. Having a lot of fun building software, quite honestly. Been at it for a bit, but in real building some of these tools for trading and then making them available for the general public is a whole new leg of that journey, and it's been a lot of fun. So the SPX options visualizer is live on the Bookmap Marketplace. You can check it out, traderade.com/SPX. You do have to have Bookmap with Rhythmic data right now. I'm building the functionality for DX feed next. That should be out pretty soon. Just a matter of changing some formatting so that it can support that symbol naming convention. And that'll be part of building this out for stocks anyway, because a lot of those are monitored via DX feed. So it all goes hand in hand. Seeing a lot of interesting selling, by the way. UBS pointed this out. Someone asked me to explain it a little more. Maybe it'll help to explain it on audio a bit more. But UBS pointed out that their trading desk is seeing these large sales of out of the money, way out of the money, S&P futures puts, right? And they're typically selling them for about 5 cents a piece, thousands and thousands of them at a time. And the goal is essentially, you could have folks doing one of two things. Either they're selling cash covered puts, which is fine. They're assuming the risk. They're willing to buy the ES contract at 4,100 should it fall there. And typically these are put on with an expiration of anywhere between the same day and a week ahead. Then, you could also have folks that are doing this because they're actually kind of collecting a dividend against a short position that they're okay with covering at that strike in ES. Could be either one. I don't really know what their whole book looks like, but what the UBS trade desk said is that eventually this may not end too well because it is kind of like picking up pennies in front of a steamroller, and I would agree with that assessment. It is interesting to see the amount of vigor that is involved with put selling lately in SPX and SPY in ES. It's like no one is concerned about downside, and then some of these single stocks have such strong Q. Such strong call skew, I should say. Yeah, someone mentioned it could also be used for managing value at risk. I could see that if you're managing a large short position, selling puts against it to reduce value at risk. So that's a good point. And just pinging around Gamma 1 here, continuing to sort of hug this level. We can see why these levels are important. The options tool does give us an idea. I think if we pull below here again, probably going to get down to that larger area of resting liquidity and either bounce there because it is quite frankly really big. So it's not too rare that you see price get like right into this and then just run away. Or, we could get pulled below. And if we do, I think it becomes more likely that that warm put becomes a price to look at into the close. But we still have interest building at this hot call strike. It is still growing there at 92,000 exchange there at that level. A little fun here for a minute. Let's see what happens with price. We've got about 23 minutes left into the close here. And we do see that pull below Gamma 1. So you could say that level's been thoroughly tested. We saw that consolidation there. Now maybe we get to see what happens with this resting liquidity below us. And it is big enough that it could act like support. That's a rather enormous bid zone. So let's see how price reacts to it. And one thing I always like to remind people about on OPEX week is this is the week where all these statistical probabilities and technical relationships and, different systems that we may rely on are not going to work as well. So factor that into the calculus of your position sizing, your risk management, and your expectations. And be careful. It's okay to not trade OPEX week. It's okay to sit back and watch the fireworks. You don't necessarily have to. And if you do want to trade OPEX week, smaller position sizes, wider stops, and lowered expectations, less trading frequency, all probably important things to consider. All right, then. Early market on close imbalance, 25 million to the buy side. These numbers don't typically mean too much, but I get them and I'll share them as we get them. Got just about 20 minutes left in the trading day, so this tends to be the most volatile period of time during the trading day, particularly the last 10 minutes where you have a lot of that order book reconciliation where people just have to transact. So for folks that have been day trading this, that have money on the table, it's not a bad idea to start closing out these positions even ahead of the actual market close. Things do get less liquid about 10-15 minutes after the close in particular, so you're not going to necessarily get the same kind of fills. So just things to consider. Got a little bit more resting liquidity appearing on the bid here. Again, may act like a bit of a magnet. We got more below. We can see that resting liquidity below us has been thickening up a bit here. Got SMCI crossing 1,000 now. We did see a lot of unusual sweeps yesterday at the 1050 strike in SMCI. And we can see that gamma 1 level now potentially becoming a call wall. We'll see how we close today, but that just means it would be some potential resistance overhead. Now it's flipping back to gamma 1. We'll watch the algos continue to process this data. It's all code that I've been working on for months. I've been testing out on the Traderade Discord, so members have had access to this options visualizer for a while. And now it's finally public on the Bookmap Marketplace after, I've worked out any issues, improved functionality. There's still more to add, but this is a really good working version. And folks, if you have any questions about anything, let me know. Got just about 15 minutes left in the trading day. Seeing some unusual options activity in Roku ahead of earnings. At the 95 strike, about 144,000 in premium paid for Friday's expiration. Stock is currently bid up 3.5%. And we've got earnings coming out just after hours here. Got some SMCI puts trading as well. 1,000 strike, about 600,000 traded for that to expire on Friday. Maybe a little bit of a hedge. The skew on SMCI is so much skewed towards calls that hedging that out with some in the money puts actually makes sense if one's long. So I could see that being part of that play. I don't think it's just a directional bet. TSM, Tesla getting some unusual call flows into the close here as well. About 500,000 paid for the Tesla 200 strike to expire March 15th. That might be a roll. You can see we're just kind of holding this level of resting liquidity, this bid right below us. Let's look at the NASDAQ. Again, looking a bit comparatively weaker than the S&P. And the Russell showing the opposite look, relatively stronger, likely because of some of these short covering flows that are coming into the small caps. Oil continuing to build just a little bit here. Rates pretty boring today, just a tepid bid. And gold choppy into the end of today's cash trading session in stocks. Gold's cash trading session largely over other than electronic. So we'll go back to the S&P. Someone asked if I can go back to oil for a second. I sure can. So here we go. Sorry about that black spot there. Just a little bit of work I was doing on my end technically, but let's zoom out a little bit. You can see most of the liquidity in oil is right here by the bid. This is another thinly traded contract. I'll probably switch it over to CL tomorrow. I think it has a little bit more liquidity on the book. Oh yeah, yeah. In terms of that song, very similar. Equinox is a great producer. Nasdaq looking pretty gross into the close here. Got about 10 minutes left. You see some of that resting liquidity above us being pulled. Not much building below though. Market on close imbalance. Final number 600 million on the buy side. Going back to ES here, just seems to be consolidating in this range. It is a distributed pattern though. You can see the microstructure. Made this high, then a low, then a lower high, lower low, lower high. The question is, do we make a lower low next? Right? The momentum would suggest that we probably do. We'll see. Yeah, you're welcome. Yeah. The Nasdaq that does have a pretty high CVD. It's actually like the whole order book almost. Like if you look at the order book depth here, that's about 8,000, all contracts, all prices. And yet CVD is negative 7,000 over the last 30 minutes. So that is some decent distribution in the Nasdaq. That's probably one reason it's a little comparatively weaker. You do see some resting offers building up above again, just kind of growing a little bit higher here as we see a bit more of a bid as we get closer to the close. S&P right back to gamma 1 on the futures contract, adjusting for SPX pricing. That delta is about 17 and a half handles for those out there keeping score. And hopefully y'all find this stream helpful and informative. Always happy to entertain feedback about different things that you might want to see on the screen. Different instruments, stocks, futures, currencies. Getting a pretty decent bid into the close here. Right above gamma 1, seeing some continuation. Let's see what the NASDAQ looks like comparatively. Yeah, pretty nice. Not as much volume, not as much conviction in the bid here. Small caps kind of giving up that same move. Go back to the S&P. So getting a pretty decent push right back up to that most active call strike. We did talk about earlier, it wouldn't be too surprising if we ended there. Got over 101,000 contracts transacting there. It's quite a bit more than the most active put strike. The most active put strike, 57,000, and that's about what, 35 handles lower. So much more conviction on the call side, a lot more transacting happening there as well. That's pretty typical when we look at zero DTEs and how they behave. They have a pretty big influence on price discovery in the market. So when you see something that's like the most active and it's a standout, that tends to be influential for price. And we could see some resting liquidity building right around that hot call, kind of adding some confidence to the idea that this is an important level. You're welcome. Yeah, I plan to do streaming more regularly. I've got it all set up in a pretty decent way. I continue to tweak and fine tune things, and I'll have more to show. You know, Bookmap is the sort of centerpiece here, but I'll be doing some charting and trading view and showing some other stuff as we go along. Make it fun. Maybe I'll do something on the psychology of trading as a stream. I know I've covered that before, but I think it would be good to keep covering it because it's such an important part of success. So just about 5 minutes away from the close here. We'll have a lot of earnings coming out for some of these mid-cap companies as we close out the day and get into the after-hours session, including DraftKings, Coinbase, Roku, the Trade Desk, Applied Materials, DoorDash, Agnico Eagle, Toast, Open Door, and Hannon Armstrong. Those are among the most anticipated earnings coming out. Of course, there are more than that, but we'll be watching those. I'll probably be hopping off, but I think it'll be interesting to see what happens with Roku given the size of those unusual calls going through. I think that adds some of the volatility we might see. I think Toast is really interesting to watch. Applied Materials, Trade Desk, those are both good companies. We'll be interested to see what the management has to say about their industry and the economy writ large. Going back to the NASDAQ for a second, a little bit of a pop there, dragged up the point of control into the close. So buyers definitely having pretty good pull there. You can see a lot of that transacting in the session volume profile here. Russell sort of consolidating, bit more choppy into the close here. And back to the S&P on screen. Let's see if we get an extension up to that hot call area. We do have that resting liquidity building there. Got about just over 2 minutes left till we close out for the second to last trading day of this week. Tomorrow being options expiration, where we do get PPI, and that could be an important number for this market. Building a little bit more here into the close. Let's check on the NASDAQ again. Pretty choppy trading in the NASDAQ here overall, but it is having a similar look. It pulled up the point of control. It is building a little here. You see some liquidity appearing above. Similar look in the S&P. You do have some liquidity building above here. So right back up to the hot call. Looks like that's where we're going to go. Almost as if options have a really big impact on the market or something. Apple is releasing an AI tool that is said to rival Microsoft's GitHub Copilot soon. That's interesting. I know Apple's been working more on their AI models. Meanwhile, we see S&P futures just touching that SPX implied hot call level on the nose and pulling back. Just about a minute left now, less than a minute in the trading day. Squaring up positions is a good idea. Things can get a little choppy in the after hours. And thanks everyone for tuning in. Really appreciate it. I'll be live streaming again soon. Hope to see you there. Right back to the hot call on the nose again. There you go. We talked about this being a possibility. It is playing out. Pretty cool, right? Look at options doing their thing. Gotta love it. You just gotta love it. Even if you're on the wrong side of that trade, and I'm not, but I mean, it's just look at how well this stuff has such a big impact on price. I mean, it's just pretty incredible to see it play out in real time like this, day after day after day. It's exactly why I built this thing. All right, folks. I hope it was a great trading day for you. If you were trading, if you were sitting here observing, that's awesome too. Hope you gained something from this stream and really appreciate it tuning in. I'll be back soon.